Welcome to Starting Your Investment Journey audio series. We have come a long way. This is the second to the last episode of this series. And if you followed from the journey from the beginning till now, you'd have probably noticed something, that investing is much less exciting than social media makes it look. There is no secret formula. There are no magic indicators. There is no guaranteed shortcut. And there are no overnight wealth system. It is not a get-rich-quick scheme. Every year, people are building substantial wealth. And how are they building it? Not through noise. They are building it through discipline. Now, let me ask you something. Suppose that I offer you two choices. And option A is that double your money in 30 days. But option B is that build lasting wealth over 30 years. Most people are emotionally attracted to option A, right? Because it looks cool and immediately rewarding. But almost all lasting wealth is built through option B. Wealth is usually not built through extraordinary decisions. It is built through ordinary decisions repeated consistently over a long period. That's the secret. The secret is not something magical. And because it sounds simple, many people will ignore it. So if you follow till this point, it means that you are ready to build through discipline. Now, here's an important thing that I want you to pay attention to. The financial world is full of noise. Every day you go online, every day you're talking to people, every day you are interacting with the financial world, there is new prediction, there is a new opportunity, there is a new crisis, there is a new trend, there is a new can't miss investment. There are opportunities that it looks like, I don't want to miss this. Remember, we'll talk about FOMO, fear of missing out. Don't fall for those things. The problem is that noise creates activities, and activity feels productive. But activity and progress are not the same thing at all. So many people spend years chasing trends, jumping from investment to another, and reacting to headlines. And they are changing their strategy every time. They are always moving, but they are rarely progressing. But discipline is an advantage. And if you have that discipline, you have a huge advantage. And successful investors often look boring. It's not something extraordinary. They save consistently, they invest consistently, they diversify sensibly, they rebalance occasionally, and they remain patient. Nothing dramatic, nothing flashy, just consistent execution. And over time, consistency becomes a superpower. Compounding, like they say, is a powerful force, and it works so well in investments. So, do you know that there is a particular thing that most people don't pay attention to? Yes, I just said it. I said it earlier now. Compounding, right? Earlier in this series, we talked about how money can grow. Now, let's talk about what it means in practice. So, what does compounding mean? Compounding is when something is growing over time at a very good rate, not just a single rate, but at a very compounding rate. So that's basically what compounding is. So compounding reward patience, time, and consistency. Compounding does not reward impatience. Most people dramatically overestimate what can happen in 1 year, but they dramatically underestimate what can happen in 20 years. And that is why compounding feels slow at first. At the beginning, compounding feels very slow, but over time, compounding feels very powerful. Now, I would advise you to ignore the scoreboard. If you keep checking your result every time, it will feel like it is very slow. So imagine that you plant a tree and you are digging it up every week or even every day to see how it is growing. That tree won't survive. Is that not so? That's exactly how investment is. Investment needs time too. Growth often happens quietly. The market may not reward you immediately, but that doesn't mean that progress is not happening. Okay. Now, another source of noise that I need also to pay attention to is comparison. Now, someone will always appear richer. Someone will always claim bigger returns. Someone will always have a more exciting story. Ignore it. Focus on your own. Keep building your own. Your portfolio is not competing against their own. Your financial journey has one objective. It is to help you achieve your goals. It is not to help you achieve someone else's goal. You have your goal, you focus on it. Now, After everything we've covered, wealth building can be simplified into a surprisingly short formula. What's the formula? Earn, save, invest, and repeat. Earn, save, invest, and repeat. Then repeat again and again and again. And you are repeating it again and again, not for 6 months, not for 1 year, for decades. That is how most real investment, most real wealth is built over the years. It is not built overnight. People can earn a high income overnight. They can even win a lottery. They can get a good job that gives them a good salary, but it doesn't mean that they are wealthy. It doesn't mean that they are wealthy. Income is not the same as wealth. Income is a reward for productive factor of production, right? So when your factor of production, maybe from rent, from wages and salaries, you're right. So that is what income is. But wealth is stock of assets that is acquired over the years. So that is what wealth is. So wealth is not built overnight. Wealth is built over a long period of time. And there is something that successful investors understand. They understand that many people are not patient, right? They understand that many people are not patient. So, and that patience is what will help you. What will help you is not more about the intelligence, it's about the behavior. So you don't need to be the smartest person in the market. You need to be someone that avoids major mistakes, stay invested, remain disciplined, keep learning, and continue to contribute over long periods. Those habits is what will compound, right? So this series is not just about stocks or bonds or mutual funds. Those things are tools, right? They are tools to achieve your investment objective. The deep lesson is that wealth is built when good financial decisions become habits. It's not just what you do at a time, it's what you do over time. Because habits remove the need for constant motivation. You're not going to have someone motivating you. In fact, what you learn now, after 1 year, are you going to still be practicing what you're learning now, or you would have moved to something else? That is where that thing is. That is the most important thing. So what you do consistently matters far more than what you do occasionally. My final takeaway from this episode again: ignore the hype, ignore the shortcuts, ignore the pressure to get rich quickly. Focus on building your own human capital. Focus on living below your means while expanding your means. Focus on investing consistently, diversifying wisely, and thinking long term. Most people are looking for the next big opportunities, but that shouldn't be you. You should focus on building gradually. And I hope that you've learned something in this series. I hope that you have maximized what we teach in this episode. Again, if you are learning without practicing, you are not doing yourself a favor, because at the end of the day, you just learn this and say, wow, this is great. And you'll move to the next course, you move to the next book, you move to the next training material. Without doing anything, you are going to remain the same. But when you practice consistently, you begin to get results. Thank you for listening. Remember, learn before you invest, build before you buy, and think long term. The next episode will be our final one. Now, let's get to it.